Ladies and gentlemen, welcome to the Money and Payment stream, powered by Visa. According to the speaker who will open the stream, the digital transformation of the payments landscape is crucial for the small and medium-sized companies. He leads the way into the future of cutting-edge financial technology, such as co-founder and managing director of Payleven. A warm welcome for Konstantin Wolff.
All right. Good afternoon, everybody, and welcome. As announced, my name is Konstantin Wolff. I'm one of the founders of Payleven and also managing director of the business. Today, I'm going to tell you a bit about the payment landscape and SMEs in particular, who are our core customers. Of course, in today's world, payments is already a huge business. If you look at it on a global scale, we have around 400 billion cashless transactions being processed every single year. And that's a market that is still growing globally at around 10%, give or take. Of course, a difference between regions in the size and as well as in the speed of growth. But overall, there are not so many industries who are growing at 10% these days, especially with the overall global climate on the economy. However, payments is still a business that is big and growing fast at the same time. Now, why is that the case? It's driven by two things that payment is still growing. One part is that consumers actually want to pay more digitally, which is obviously seems to be a, let's say, common wisdom. But if you actually also ask why they would like to pay by card, it has a lot of different reasons. One being that it's more convenient for them. They feel secure, especially in areas where there's more crime. There's a lot of motives, but generally speaking, the consumer wants to pay more digitally, and cash is no longer in fashion, so to speak. Cash is no longer king from the consumer perspective. Of course, again, various differences by region, but that's broadly speaking what we see. Secondly is that there are still a vast majority of businesses who today do not accept any digital form of payments. Even if you think that in countries like the UK, for example, which is one of the most advanced payment countries in the world, so to speak, in terms of cashlessness, that country still has around 2/3 of all businesses not accepting, if you like, an old way of cashless payment, which is card payments. Because everybody in the room, being sort of involved in technology, would probably think card payments, that's sort of from the 80s or 90s, and everybody has that these days. But actually, matter of fact, there's many SMEs and especially small businesses still do not even accept card payments. There are still countries like France where a double-digit number of purchases in terms of share of wallet are done by check, something that has been done in many countries years ago, but it's still out there and it's still being used as a form of payments. So in that sense, there's a lot of debate around payment technologies, and I guess that's something we're also going to dive into further throughout the session. But in a way, we still believe in card payments as Payleven, because we say there's a vast majority of underserved SMEs who today do not accept card payments. And at the same time, you have hundreds of millions of consumers having cards. On average, in Western Europe and also North America, people have, in some markets, up to 5 cards per person, credit and debit cards that they use every single day. So that's sort of the network that we want to leverage to actually serve the underserved market of SMEs to accept card payments. Why? Why should they bother about card payments? Because it's proven that it actually helps them to grow revenues. There are a lot of studies where actually card payments leads the consumer to spend more. And we've done recently ourselves as a business, we also involved in not only in serving SMEs, but also in involving charities. And we supported some fundraising activities in the Netherlands. And the amount of money they raised to the previous year was 5 times higher because they accepted card payments. Because instead of people just giving a couple of euro coins, they all donated at the end 5 or 10 euros on average. So the average basket of donation from the charities on sort of a street activity to collecting donations actually increased 5 times through the use of card payments. So small businesses want to take card payments because it grows their revenue. However, so far, there hasn't been a solution that is really catering to their needs. Now, a bit of background on the company of who we are. We were founded nearly exactly 3 years ago. We're by now live and operating in 11 markets on 2 continents. So that's Europe as well as Latin America. And we are a regulated payment institution by the FCA in London. What do we do as our core business is what you see on the screen. It's offering card acceptance via smartphone and tablet. So essentially, we offer the same functionality at the core than a traditional card terminal does, just with a different form factor. That's not where it stops, so there's more to it, and I talk about it more, but at the core, this is what we do. We offer SMEs the ability to accept card payments with our smartphone and tablet app in combination with a chip and pin card reader that you see on the screen, which essentially replicates the functionality of a traditional card terminal. It's PIN transactions on debit and on credit cards. Now, who are our core customers? It's SMEs, as I said. It's a very horizontal solution, so it's not focused on one particular segment. It actually goes across the different segments, whether you are a hairdresser or a taxi driver or a plumber or electrician, it doesn't matter. Our solution is made and catered towards the SME company. That's typically a business of 0 to 10 employees, very much owner-run, which means that the owner is still in the store, still visiting customers, providing the service, being largely involved, and being the key decision maker of the company. So we don't talk about organizations where you have finance departments and people doing purchasing, and it's very much owner-run, where the business owner also takes the key decisions. Now, sort of looking at card payments for SMEs, what are the problems you need to solve? And they're actually, broadly speaking, 3 categories. Because if you look at, of course, card payments and card acceptance has been around for decades. And there have been traditional card acquirers, as they're called, offering card payment solutions to companies in general for years now. But why is it that 2/3 of the UK companies or UK SMEs do not offer card acceptance today? It's mainly because of 3 obstacles. One being what we call the operating model, which is around the onboarding and the risk management of the merchant. The second is around the go-to market or the distribution, actually reaching SMEs in a cost-effective manner and acquiring them as customers at a low cost. And then the third is actually the technology you use. So going through those different components will probably give you a better idea of how we innovated in the card payment space. So of course, we are within the technology of card payments, but in that, we still see ourselves very much as an innovator, doing things differently to bring an offer to market that's actually catering to SMEs and therefore unlocking the potential of the vast majority of SMEs not taking card payments today. So the first part is sort of the operating model. When you want to get a traditional card machine, you need 4 to 6 weeks for a variety of reasons. They're going to ask you to sign paper contracts. You will have to file documents that are signed by a notary in terms of being copies. They will ask you for historic profit and loss statements and balance sheets and all stuff that typically a small business, A, doesn't have time for, B, might not even have, and C, can't be bothered to actually take care of. Overall, this process takes 4 to 6 weeks. We've brought that down through digitalization and through an automatic onboarding process to 1 day. So instead of waiting 4 to 6 weeks, you can actually, in 1 day, start accepting card payments. And that is a significant burden that you take out of the overall customer experience in order to accept card payments. Secondly, we focus a lot on customer care. We've built a predictive algorithm to actually reach out to merchants whenever they have a problem to actually help them through the process. So we don't wait for customers to call us. We proactively call them at the moment we see that what they do on the platform seems strange, and therefore we reach out to them instead of waiting for them to come back. Of course, in every single market we operate in, we have native customer care. So when you call in Italy, you will always speak to an Italian, etc., to actually help the small and medium-sized enterprise. Because again, larger players try to do everything in English occasionally, but you realize that not in every market everybody speaks English, of course. So you have to be really local, and you have to provide a variety of channels how the SME can reach out to you, whether that's email, chat, phone, online help center, it doesn't matter. You need to be reachable in the local language for the company to actually be relevant. Technology, we've taken out a lot of the cost of card payments. If you look at the traditional card terminal that cost around 500 euros. The card reader that you see that we sell is actually at 79 euros. So it's a fraction of the price of a traditional terminal. Of course, we assume that people already have a tablet or a smartphone, whether that's Android or iOS, it doesn't matter. But assuming you have already a smartphone or tablet, you only need to invest 79 euros instead of 500 euros, which is significantly changing the cost again from the traditional model of card acquiring. Of course, that's not where we stop. The beauty of the iOS and Android app environment is, of course, that the processing power of a tablet or smartphone today is at the level of computers a couple of years ago. So in terms of flexibility and speed of computing power that you have on those devices, in combination with an app ecosystem where you can, through SDKs and APIs, actually interlink with other solutions, is way beyond in terms of usability and flexibility than traditional card terminal. We today have around 500 integration partners who have some sort of solution out there. Might that be a POS register solution or something else, and they want to integrate payments into their solution, where they have standard interfaces, might that be a software development kit or an API, where they can integrate our payment solution into their software that they are running, which is creating an interconnectivity and overall an environment for the SME to use multiple solutions who talk to each other in a way that is, again, not really doable without customized programming in the traditional card acquiring world. So it's not only lower cost that we bring, but it's also significantly higher usability and feature richness to the traditional card world. And then lastly, we changed the commercial setup and the go-to-market to card payments. Typically, when you enter into a normal card acquiring context, you sign a contract for anywhere between 2 and 4 years. You commit yourself to 20 to 40 euros of monthly, that's minimum fee in order just to be live. And we've cut that all out and said, let's have a simple pricing. So no more than 4 price points so that everybody understands what he or she is actually ending up paying. And secondly, let's not have any contractual duration. We believe in the product. If the product is good, if they see the value, they will stick with it, they will use it. But we don't want to lock people into a 4-year contract and by that have a major revenue stream for us. But instead, we actually want to have it as a pay-as-you-go version of card acceptance. And that's what it is. You only pay for it when you use it, and people can stop any day without any liability towards us. That is, of course, having some repercussions on how you sell the product, because in the traditional card world, the main channel is direct sales, where it's no problem to have a direct sales guy running around because you can pay him 150 euros commission for a contract because you have a secure cash flow of 36 months, 24 months of 20, 40 euros minimum fee. Now, at the point where there's no contract, there's no secure cash flow for the future, it's harder to pay somebody 150 euros just for one merchant, especially if it's a smaller merchant than traditionally in the card world. Now, therefore, we also had to innovate how we market the solution. And the key thing for us of how to market it is actually go through retail and distribution partners. So today, you can buy our solution when you go, for example, to Metro, which is Europe's largest cash and carry chain. That's the place where a restaurant owner, a cafe owner, a bar owner goes to buy groceries, pans, glasses, whatever he or she needs for his cafe or restaurant. Now, we are sold there as a packaged good in the way that you can buy the Payleven card reader off the shelf at Metro Cash and Carry. You go online, you register yourself, you tag the device to your account, and you're ready to accept card payments. That is, again, changing the way we market card payments from a traditional direct sales model to more a distribution indirect model of promoting card payments. And actually, we were the first ever to start retailing, if you like, a chip and pin solution. That has never been done before, and therefore changing the customer journey as a whole. Before, you were first signing a contract, waiting for 4 to 6 weeks to get something, because then somebody came to your shop to install the card terminal. Now it's different. Now you first buy the terminal on the spot, you have it in your hand, and thereof you can actually go sign up and start taking card payments. So those are really the key elements how we've changed the way card payments worked. We changed the operating model in terms of onboarding and risk management. We've changed technology to a mobile and ultimately app-based platform that is bringing more flexibility, lower costs, and higher usability for the merchant. And we've changed the way card payments is marketed and ultimately merchants are acquired in a highly scalable fashion. I mean, we acquire merchants at less than 10 euros per merchant, which is something that if you compare that to 150 euros for a direct salesperson, that's a hell of a lot of difference in terms of unit economics. Same goes for onboarding. Traditional card onboarding is 40, 50 euros because a lot of manual entry of paper contracts and so forth. We do that at 4 to 5 euros. So in that sense, through digitalization and also through automation, we've really changed the value chain of card payments and the underlying cost to create overall more feature richness and functionality for SMEs. And with that, are continuing to run our operations globally to, at the end, build a card payments provider that is serving SMEs across different payment channels in a very cost-efficient and easy to comprehend way for the merchant. And with that, I would like to thank you for your time and enjoy the rest of the day.